Joining us now, chair of the White House National Economic Council, Kevin Hassett. Kevin, thanks so much for joining us. Let us start, obviously, with the latest jobs numbers. The economy, according to BLS, lost 23,000 jobs in July, when economists were expecting a 95,000 job gain. The job creation you boasted about for the previous 2 months, unfortunately, those numbers were also sharply revised down. It turns out 100,000 jobs were not created in May and June. You said in June that this was, quote, the strongest job market in your lifetime. By what metric?
Yeah, I think that one of the things we're seeing is that these jobs numbers are getting revised left and right. You can remember over the last couple of years, there were millions of revisions. And the bottom line is that if you look at the overall economy, then things are really, really booming. As an example, there are 83,000 construction workers building factories right now. That's a number that we've never seen before. Initial claims for unemployment insurance are the lowest they've been since World War II. There are more job openings than there are unemployed workers. So there are all these things that suggested the numbers should have been really strong. And when it didn't come out strong, we sort of dug in and we saw that the two things that made it negative, one of them was a reduction in government workers, and it was mostly teachers at states, taking July off. And the other thing was that the FIFA ended, and so that we had a whole bunch of hospitality workers, file for unemployment in July. And so anyway, so you take those two out and you get back to what the consensus number was, about 100,000 job creation. And the point is, if that were in isolation, I wouldn't be caring about like throwing this or that on the side because it's a special story. But the fact is, everything else is so strong that I think that it makes sense that the consensus was about right.
Well, we can look at 1 month here or there, but let's take a look at the overall jobs record under President Trump. Yeah. There have been job losses for 6 out of the 18 full months of President Trump's second term. That's a third of them. And the Trump administration has only added 548,000 net jobs so far, which is considered very slow growth. It's growth, but very slow. 2 million jobs were created in the last 18 months of Biden's presidency. Are you really arguing that your numbers are better than that?
Well, I disagree with your number. We'll have to follow up on email, but I just looked at the latest number. It was that job creation under President Trump since January 20th is about 880,000 jobs. But we won't argue about 800 or 500, factually on a show right now. But the fact is that the thing that really jumps out at us is that those are really good jobs. They're manufacturing jobs. They're construction jobs. The number of manufacturing jobs under Joe Biden dropped by 230,000. And the reason that matters is the intuition that, candidates of both parties understand that these blue-collar jobs in construction and manufacturing, they're really high-paying jobs. And so the typical construction or manufacturing worker in the U.S. has seen an increase under President Trump of $3,000 or $4,000 to salary. And under Joe Biden, it was about negative that. It dropped about $3,000. And the reason is that manufacturing was collapsing, and so the high-paying jobs were going away. And so I think that we'll take our record over his every day.
Well, you're talking about manufacturing jobs. I'm talking about the overall job market. Even if we go with your number, okay, which I think incorporates January 2025, when President Trump was inaugurated on January 20th, and I'm not going to bicker on that.
That's not bicker, yeah.
Yeah, it's 800,000, according to you, versus 2 million under Biden. And I think the issue is that there are two things right now that the economists say are weighing on the economy. Both of them are specifically Trump policies. One is obviously the Iran war, which has led to high gas prices. The president said that war would take 4 to 6 weeks. We're now in month 6. And the second policy that's having an impact is tariffs, which, according to a recent report by the Fed, those tariffs were passed on to consumers, in the form of higher prices. So it does seem as though the president's policies have led to this economic situation where the job growth is slower than in the last 18 months of Biden's administration.
Right. Well, let's unpack these things. First of all, if you look at the latest inflation numbers, right, the consumer price index was negative for the month of June. Core was 0. That's the thing that the Fed cares about. The PCE index, which is the Fed's #1 index, was negative both for core and top line. And so all of the price data have been decelerating. Now, there was a big inflation in the previous administration, but there's been rapid deceleration of inflation under President Trump. And so if you're going to tell a story that tariffs are causing some kind of positive shock to inflation, then you got to come up with some counterfactual that explains why it is that right now inflation is running at about 0. And so I don't think that's an issue. And I think that, again, going forward, if you look at imports, so the trade policy has made everybody want to onshore their stuff. If you look at imports right now, 50% of imports imports of the U.S. are capital goods, which are going into those factories that are being built by the 80-something thousand construction workers in the factories. And so that's a very, very successful trade policy because it's creating jobs that we'll see in the second half of the year when the lights go on in those factories.
It's not me that's saying that those higher tariffs that those costs were passed on to consumers. It's the Fed in a recent report that I'm sure you've read. But let's talk about gas prices. They're high because the Strait of Hormuz is still closed because of the war in Iran and Iran taking the Strait hostage. A month ago, you said that you were, quote, bullish, that there's going to be a heck of a lot of traffic moving through every single day, unquote, and that you expect that this will, quote, cruise to normalcy sometime really, really soon, unquote. No, that is not the case right now. And Iran, most recently, has delivered this set of demands that must be met to open the strait, and that set of demands includes the lifting of the naval blockade and sanctions, war reparations, the release of frozen Iranian assets, an end to attacks on Iran's allies. So I guess I just don't know when really, really soon is.
Well, it's happening already, Jake. And first of all, I don't negotiate with the Iranians, and I don't think I'd be very good at it. But the fact is that right in the peak of the conflict early on, you saw that oil prices were going way north of $100 a barrel. Right now, they were like high 70s late in the week. I think they're running about 80 over the weekend. And so the reason oil prices have come down is that our excellent U.S. Navy has been escorting ships out of the Gulf. But also, we've taken a whole number of steps, including increasing production in the U.S., waiving the Jones Act, so that right now 100 million barrels of Gulf of America produced oil are now shipped into the East and West Coast because we waived the Jones Act. That's put downward pressure on prices. Now, prices are still higher than we would like, but we've taken a lot of steps so that when the Gulf situation is resolved, then we can expect prices to go way, way down because of all these new measures that we've taken.
I know you don't negotiate with the Iranians, but you do talk about the economy, and you said you're bullish there's going to be a heck of a lot of traffic moving through every single day.
Right, like if
I wouldn't call it a heck of a lot. It's not a heck of a lot, though.
The price went down about 50%, so that's kind of impressive.
The numbers released on Friday show that wage growth is not keeping up with inflation. Average hourly earnings barely rose from June. Inflation is at 3.5%. That's above the central bank's target of 2%. A CNN poll a few months ago found that 61% of Americans have said that they had to cut back on groceries. Is that not a problem?
Well, it sure is a problem. Grocery prices are way too high. It started out when we basically printed money and helicopter dropped into the U.S. and created a 20% inflation. In the past, I go to the grocery store, I do the shopping, and I keep an eye on prices every week, and there's stuff like the price of beef that's still really, really high and very problematic for people. The thing is that you mentioned the 1 month number, that if you aggregate over the Trump term, that again, the typical overall worker is making $1,000 more after adjusting for inflation, and $3,000 or $4,000 more if they're in a blue-collar job. And so those people have more money for groceries, but grocery prices are still high, and we've still got a lot of work to do. Now, one of the things that we've been doing is that we've been taking steps to address these issues. So we started out with avian flu, and everybody was talking about egg prices. Egg prices are really low right now. And we just have this massive effort by Brooke Rollins to address this pest that's coming in and made it so we had to shut the border to Mexico so that the pest wouldn't spread all over the U.S. And we just reopened the border for Mexico. So there should be good news on beef prices right around the corner.
How do you square you saying just now we still have a lot of work to do with you saying that we are living in the greatest economy in your lifetime?
Right. Well, okay, so people are losing their jobs at the lowest level since World War II. Losing your job is a really bad thing to happen to somebody. And the labor force is way bigger than it was back then, so that's a remarkable piece of data. Keynes argued that the business cycle is being driven by investment fluctuations. We've got capital investment in the U.S. about the highest I've ever seen. And so we've got all the cyclical things that we normally look at saying that this is an economy that's in liftoff stage. And so, yeah, I stand by it. I think the other thing is with AI, we've got lots of estimates that say that productivity growth is around 2.5% right now, which is the sort of core growth rate you should have in a typical year going forward, even before you spend money on new machines and new workers.
Kevin Hassett, thank you so much.